Hello there today, viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Davenport, and this is your Dairy Week in Review for September 27th, 2013. So let's take a look at those CME dairy components at the conclusion of Friday's trade. Blocks settled the week at 175, even down 4.5 cents. Barrels settled the week at 172, even down 4 3/4 cents. Cash butter added to gains again this week and finished at 161, even up just 1 cent. October whey futures finished at 57.975, up 0.3 cents on the week, and October non-fat dry milk finished at 181 1/4, up just under half a cent. Class 3 futures settled up the week mixed. October finished at 17.96, down 13 cents. November finished at 17.76, up 6 cents. And the 2013 average settled the week at 17.73, unchanged. Let's take a look at that weekly black barrel average chart. Again this week we did see the black barrel average sell off 4 5/8 cents into Friday's close. During today's sessions, blocks settled unchanged at 175, even with 3 loads trading hands. There was some decent buying interest today. However, there wasn't enough buying interest to move that price up at all. Barrels also settled unchanged on the day at 172 even. There was a bit of buying interest in the barrels as well, but no sellers are willing to step in. There is no trades that took place in the barrels today. Now taking a look at our second month milk chart. Here we have a weekly chart of October milk. So the October contract traded within a pretty narrow range this week, putting in a high of 18.22 on Monday and a low of 17.84 on Monday as well. Those ended up being the weekly highs and lows. We traded within that range throughout the rest of the week. Now the October contract closed out the day today at 17.96, down 13 cents on the week. Largely for the whole month of September, we've really been seeing milk trade in a sideways pattern here. We haven't really broken any higher highs or higher lows here. We've really just not seen a whole lot develop over the past 4 weeks or so. But eventually, the longer we trade within this range here, we're going to have to break out one way or another, either to the upside or the downside. At this time, though, only time will tell which way we end up coming out of this range. So speaking of range-bound trade, we've also been seeing whey prices trading within a fairly narrow range going all the way back to the March time frame. So since March, whey prices have largely been trading between the 56 to 58 cent per pound range. So similar to milk, we're going to have to see whey prices break out of this range at some point. Now, at this point, again, there's no way to tell whether we're going to break out either to the upside or the downside. But since we have been trading within this very narrow range here for so long, we'll likely see a fairly significant move out of this range once we finally break out either below this red line or above this red line. It could be a pretty big move in that direction, so we're just going to have to sit tight and see what plays out here. Now let's take a look at non-fat dry milk prices. We've been seeing the exact opposite of what we've been seeing over in whey here. Non-fat dry milk prices have now been trending higher since the April time frame. Non-fat dry milk prices have gone from around $1.50 per pound to over $1.80 per pound at the present prices. Now we've been in this pretty steep uptrend here, mainly supported by the fact that non-fat dry milk exports are up 62% year over year. So we've been seeing a tremendous amount of support to non-fat dry milk prices due to those very strong exports. Taking a look here now at weekly dairy cow slaughter numbers. Weekly slaughter for the week ended September 14th came in at 65,900 head. Now that's up quite a bit from where we were at a week earlier, and again puts us above those 2012 levels. The 65,900 head level is the 5th highest weekly culling rate of 2013, and it's actually the highest that we've been seeing since back in March here. However, year-to-date, weekly slaughter numbers are still tracking about 2.5% overall above where we were at in 2012. Now again here, looking at just the seasonal pattern, the increase that we've seen from the July low has been pretty typical. We saw a little bit of a larger increase here just over this past week than we did over the past couple of years, but it looks like now we could expect to see culling rates settle in at around this 65,000 head level possibly, and continue to trade in a sideways pattern here until we hit a big drop here due to the Thanksgiving holiday, and then we'll more than likely recover off of that before a big drop going into the Christmas and New Year's holidays. Taking a look now at the week ahead, on Monday at 11 a.m. we'll have a quarterly grain stocks report released, and again look for weekly dairy cow slaughter numbers to be released Thursday afternoon. That'll do it for us here today. On behalf of the Market 360 advisors here at Stewart Peterson, thanks for watching and have a great weekend.